Hi there, this is Bob Graham with Riggs Asset Management Company. I want to talk about something, well, I don't know if it's different, but maybe a little bit different. There's been a lot of talk about the dollar, primarily the dollar going down in value. And so we're going to put a chart up so you can see, the history trading range of the dollar since 1971 when we came off the gold standard. And what you find is the dollar is traded in some pretty large ranges. Right now, we're kind of dead center in the middle of its historical range. But it's likely we're going to see the dollar move down in price, perhaps over the next year, perhaps over the next couple of years. And so we want to look back and say, well, last time that occurred, what was the outcome? So in order to look at that, kind of got to go back to, say, 2002. So the period of 2002 to 2007, we basically saw the dollar consistently grind down, moving lower. By the way, when something like the dollar moves, it's never in a straight line. It's always, 2 steps down, 1 step up, 2 steps down, 1 step up. So we'll probably see that going forward. But the question is, in that environment, what were the areas that did the best? So you go back and you look and go, wow, during that time period, things like copper went up 450%. Gold went up 250%. Industrial metals went up 260%. Here in the US, best performing industries were energy and materials. Energy was up 240%. Materials were up 170%. International markets, developed markets did really well. Europe, as a kind of a proxy for developed markets, was up 170%, and emerging markets, so think back then, most of Asia, Latin America, were all up very strongly, roughly 240% over that time period. By the way, that's my puppy down there making that noise. Anyway, lots of numbers. But what it says is that, we're in an environment where we're likely to see similar types of things happen. That's the old saying, history doesn't always repeat itself, but it often rhymes. And we're seeing that. What are the strongest areas in the markets right now? It's metals and mining. It's precious metals. It's industrial metals. We're seeing international markets, whether they're developed markets or emerging markets, do well. We think we're in an environment where it's likely we'll see the dollar continue to move lower. That's not necessarily good or bad. It's just simply an environment. It's like the weather outside. But what it does say is what's going to be moving and where are the best places to put money. And that's what we're taking advantage of today. So if you look at your portfolios, you can see a healthy exposure to international markets. That could possibly expand. You're seeing a healthy exposure to materials, base metals, precious metals. You could likely see that expand, depending on what goes on in the markets. And the other areas, if you look at, what does well, again, energy, base materials in the US, and then followed by things like utilities and industrials. So in this environment, we're placing monies where it's going to be treated the best. And if the dollar continues to pull or decline like we expect it will, then that's going to be really good for your portfolios as we move forward. Obviously, if things change, we'll change with it. But I just want to have that talk about what's going on with the dollar, what are the outcomes, and how can we take advantage of that? And that's what we're doing. Anyway, if you have questions about this video or anything else, please give your Riggs team member a call. We're here to help you in any way we can. Thank you very much.